ஓகேடா, ஜூம்ல யூடியூப்லயும் வருதான்னு பார்த்துக்கூடாது.
சார் செக் பண்றேன் சார்.
நினைக்கிறேன்.
எஸ் சார், சார்.
Am I audible? Very good evening to all of you. Welcome, Shanmunathan sir.
Good evening, sir.
Sir, my voice not audible, sir. Will you pass it?
Say good evening, all of you. Whether
audio ரொம்ப low இருக்கு sir, ரொம்ப low இருக்கு.
Few seconds and check now. Is it audible now?
Yes.
All of you.
Yes.
Now better. Confirm.
Yes, sir. Comfortable.
Fine. Sure.
Very good evening to all of you. Welcome to our Premier Academy. Afternoon, we have come across auditing presentation tips by Vikas Oshwal sir. 2 days before, we have discussed about financial management also. Now, accounting standards based on students' request. Substantial mark is coming from accounting standard. How to prepare accounting standard, how to present accounting standard. What is the strategy for presenting the answer? What are all the manner they will ask? What are all the accounting standard you have to focus for this September examination? All those things is going to deliver by Shanmunathan sir. Before that, I would like to announce few things. Now, yesterday we have started the fast track mentorship program, 5 days fast track mentorship program, and followed by another 4 days financial management mentorship program also going to start from 25th of August onwards. Financial management mentorship program, within 4 days you are going to cover entire financial management, and you are going to write each and every chapter. You are going to write the test also. Thereafter, you are going to write the consolidated test. Next, for next examination, Jan examination, we are going to start Zoom live class. It's a comfortable time for the articleship students as well as office goers. Daily you are having class in the evening, 8:30 to 10:30 p.m. Night 8:30 to 10:30. First 40 days costing class. Thereafter, another 25 days financial management class, the regular class. It's going to start from 22nd September onwards. After completion of the examination, we are going to start. We are having e-books also. Nowadays, nobody ready to use the physical book. Therefore, e-books we are having for all the papers. Inter, CA, Inter, CAA Inter, CS Financial Management also available. And the final costing paper also we are having e-books. Then, for final examination, final costing Zoom live session, daily crash course, that is what fast track course I'm going to conduct from September 4th onwards. It's a daily class, 1 week class. So make use of the information for final students. And Google Drive class is also available. Google Drive with the mentorship program, merged with the mentorship program. So if you are going to take the Google Drive, you are getting the mentorship program also for intercosting as well as financial management. Similarly, CAA costing, CAA management accounting, and financial management. And Group 2 combo offer is also available for all the papers, including auditing paper and including SM paper. For CMA, separate Google Drive session classes available. Google Drive recorded classes available for Group 1 costing paper, Group 2 financial management and management accounting, and final costing also available. And similarly, for company secretary CS, we are having financial management Google Drive class. Chapter-wise classes also available in the Google Drive, because many students are requesting, they are not comfortable with only with the standard costing or only with the marginal costing or process costing. So any chapter if you want for costing as well as financial management, Google Drive class available chapter-wise. And we are conducting topic-wise test. Each and every topic, like school, you have to write the test. Topic-wise test also available for both the costing and FM. 14 tests you have to write in costing plus consolidated test. Similarly, each and every topic financial management, 9 tests you have to write plus 1 consolidated test. In addition to that, we are starting from first week of September onwards, mentorship program for January examination, both costing and financial management. It's a 1 month program, continuous program for costing as well as financial management. These are all the sessions available. In addition to that, we are going to conduct marathon session also. So details I'm going to post. Now over to Mr. Shanmunathan, sir. Thank you for accepting this, sir.
Thank you.
Presentation by C.A. Shanmunathan, sir. And YouTube live students, is it audible, comfortable? Yes, sir. We can start.
Fine. Thank you. So thank you, Hariharan sir, for this opportunity. So, in the next few minutes, first we will discuss about few most important things with regard to exam presentation. After that, we will go to some specifics of accounting standards. So I would like this to be interactive, but I guess since the YouTube live kind of thing is also there, it may not be possible to have interaction because this kind of sessions in interactive mode is
Interactive is also possible. Zoom students also available, sir. They will answer.
sure, sir, sure. So what I mean to us, sir, like
Okay.
all the participants.
Understood.
Sometimes, yeah, that's what. So first to start with, let us go to some specifics. So focus better for the next few minutes. Even though it will look like whole of advanced accounting, the specifics are only with respect to accounting standards because the current scheme of things, syllabus, almost accounting standards are our syllabus, except the buyback and branch. If you take almost every other topic is covered within accounting standards. So that is the kind of importance. First, some basic aspects which we will quickly finish. So try to maintain reasonable handwriting throughout the answer book. It should not be like first few pages are very clear and thereafter handwriting start changing. It should not be such a situation. Try to maintain a kind of stability and the minimum requirement, it should be legible. The other side should be able to read and evaluate. Then the conceptual sequence should be visible. Like audit trail, the conceptual understanding should be visible in your answer book. It should not be like we try to explain something in the process, end up explaining some other point. It should not be like that. Concept clarity, very important, need of the hour. Then the most important point, this in classrooms, we call it as 1.65 minute rule. Some of these things would have been shared by Hariharan sir also. So what I'm trying to tell through this is many students who wrote exam, if you ask their feedback, first sentence invariably will be accounts paper was easy. Sometimes they will say reasonable maximum. I mean, if the paper was tough, it is like they will say reasonable. So every student, the biggest challenge is answering within the 3 hours. So for this, remember your rule is 1.65 minute per mark. Roughly for 10 marks you calculate, 14 marks you calculate and have a time target. For example, for 6 marks or let us take even 4 marks. For 4 marks, you should know your boundary. It is like roughly 6-7 minutes time. So if a student is answering more than the 6 or 7 minutes, very simple, we are spoiling the answer in terms of some other big question. Similarly, a balance sheet, suppose 14 mark question, nowadays that is the trend which will come in the next part also. For a 14 mark question, currently the time allotment should be 24 minutes maximum. That's okay, 5-10 minutes extra is no harm, you will manage. So ensure you have some sort of a time target, not in the exam hall, right? Before going to exam itself, plan this. This is possible. This is possible. Then try to answer for the maximum mark. I am talking about a normal student. So there may be exceptions, like they would have prepared 1 year, 1.5 years, something like that, means their accuracy level could differ. But general rule, try to answer the maximum. So don't expect like we answer 70 marks, we get 65 or 68 like that in CA exam. This is like a general remark applicable to all the papers. I restrict to advanced accounts. Sometimes the latest trend, the smiley generation, this generation branded as smiley generation. So if their balance sheet or some accounts tally, they reflect their happiness by drawing smileys. Avoid that because it could lead to something like withholding of result. So it is so sensitive. What I suggest is avoid the smileys. Then the next, I'll go to some specifics in terms of presentation. If possible, I have a plan to finish at least some 4 questions, which will be like out of the box thinking. The question paper will be structured in such a manner that at least some 10 to 15% of the questions, I am saying at least, will be a kind of brand new question, which means you might not have seen those questions, not the entire thing. Remaining 85% is there, which you can always do well. But this 10 to 15% will be brand new. That is how the general trend of questions. So if brand new in the sense, the concepts you would know, it's like you may be seeing the question for the first time, some of them. So, for example, accounting standard 2. If you take the very basis of inventory valuation, it is cost and NRV, whichever is lower. So it is and not R, but that won't affect our answers much. This also I would like to clarify because general answer in a live class would be, if I ask, they will say cost or NRV. Reality, it is cost and NRV in the standard, but that won't affect answer much. Don't worry. Now next, is there any exception to this rule? If you think like that, there is one para which is popular both in inter and in final. I'll tell verbatim that para that has come in the very recent exams also. See, within 3 exams, if you see, one first question would be this accounting standard 2 question that covers this para, MCQ question. But some students may be knowing this, some students may not be. They, through other mechanism, they find the answer. That para, materials and supplies held for use in production. The whole sentence, what I told so far, refer to raw material. Materials and supplies held for use in production are not written down below cost. They are not going to write down that below cost. What is your general rule? You will take cost, take NRV, compare the lowest of the two. You will take lower of the two. So what we are doing here, it is we are learning an exception to the general rule. What is that exception? So it is like we will not write down. If NRV is lower also, we will not write down. When you will not write down, if the finished product in which they will be incorporated is expected to be sold at or above cost. What is the meaning of this whole sentence? You are having a raw material. What is your general rule? Cost, NRV, compare, take the lower of the two. This is the general rule. But if your NRV is lower and your raw material is going to be incorporated on a finished product, and if that finished product is expected to be sold at or above cost, then we will not write down raw material. Today you are valuing raw material, but what are you comparing? You are comparing the cost and NRV of finished product. This is one exceptional rule. Time and again several questions have come on this. So both in inter and final. So you need to be alert. Then focusing on some common points which will have impact in at least 5 topics, 5 chapters. I'm talking about 5 chapters, not simply some subtopic. I'll tell first which are all the topics affected. Accounting standard 2, which we are currently discussing, company final accounts, branch accounts, and amalgamation, consolidation. In all these 5, one point, common point is there. That popular point is computing the unrealized profit or profit. Now your profit computation can be on cost or can be on selling price. So if you are computing the profit from cost, you should take cost as 100. If you are computing the profit from selling price, it could be called in the branch context invoice price. You should take the invoice price as 100. Fix the other things, it will be easy. Standardize this working, just 2 steps. Second, where from you are computing, equally important point, where from you are computing the unrealized profit or profit. Unrealized profit will come consolidation, amalgamation. There they will call it as unrealized profit on intercompany stock. And that is a popular adjustment in CA course. Very often questions come on this. I mean, questions have this adjustment, including latest in the consolidation. So what you need to do, simple, be clear on two steps, whether the profit is given on cost or given on selling price. If they give the profit as a percentage on cost, take cost as 100. See how many topics I told, almost 5 different places. So the possibility of this concept being tested is more. And if something is affecting 5 chapters, definitely we need to be clear about it. So then next, so if the profit is given on selling price, take the selling price as 100, fill up the balance. They are going to give you percentage. Second step, equally important. Are we computing the profit from cost or profit from selling price? This we need to be clear. And in AS2 itself, you have this adjusted selling price method. If time permit, I will show one demo question on that adjusted selling price. That would be out of the box thinking kind of a preparation. So, but with whatever concepts you have in mind, if you streamline and if you focus, you would be able to solve. And for theory questions, it is always better to present your answers as facts, analysis, conclusion. So that is better. If it is still more like this method will work for 4 marks. If you have 5 or 6, then the best presentation. So it is like you can have facts, then provisions of accounting standard, and then analysis, conclusion. In the analysis, let first para be the provisions of standard. Second para, how do you apply? So this exam, specifically, whatever I'm presenting here, in this order, the standards can be taken as important. So this is like, we are not predicting what will come, what will not come. These are like focus areas where you have to concentrate better. Accounting standard 17, segment reporting. You can learn this standard in a very quickest possible time. Why? Because those 3 tests only you have to remember. One is that revenue test, second is result test, and the third one is asset test, segment asset test. So if you are segment revenue different, enterprise revenue different. In about 5-10 minutes maximum, you can have more than reasonable knowledge in the standard. Segment, what is segment? Is a separate component, separate business. So it could be business segment, geographical segment. So what are all reportable is very popular. Every standard, you should have a 1-page summary, which should include objective, what for that standard is there, scope, where it is applicable, where it is not applicable. Your last minute revision will be very comfortable if you have these things. And the next one, measurement, recognition, presentation, disclosure. Some 6 points only I told. One is objective, scope, and then the in between there is definition that if you require, you can refer, otherwise not required. Recognition, I mean measurement, then only you can recognize. Recognition, presentation, disclosure. This 6th should be in your mind frame to develop. So this 3 tests, what percentage I have to remember? Simple, 10% threshold. So you have to add all the segment revenues, calculate 10% of that. For example, for revenue test, if any segment having revenue in excess of 10% reportable. Then second, asset test, add all the segment assets, calculate 10%. Any segment having assets, segment assets in excess of 10%, 10% or more, that become reportable. What is reportable is a very popular exam question. And the third one, result test. If all the segments operate in profit, add the segment profits, arrive at the total, calculate 10%, that become reportable. If all the segments operate in losses, add those losses and calculate 10% of that, then those segments which have losses in excess of 10% reportable. So if you have both profits and losses, that is where the technicality is, that is where you have to focus a little more. Add the profit separately, add the losses separately, whichever is greater in absolute amount. So you cannot suppose plus 10 minus 200. Mathematically, plus 10 is greater. But AS 17 rule is not like that. AS 17, whichever is greater in absolute amount. That means I have to ignore plus and minus, and the 200 is greater. 10% of 200 would be 20. So any segment having either profit or loss in excess of that 20 reportable. See, I'm not confusing you at all. Simple change in your mechanism of working. What is that? Add profits, add losses. Whichever is greater, if I say, you will immediately say plus is greater. But here it is not like that. Whichever is greater in absolute amount, which means I have to disregard that plus and minus, and whichever is greater, losses are greater, 200. I have to take 200 minus 200 and then calculate 10%. Now, since loss is greater, I cannot keep reporting all the segments operating only in losses. That is also unfair. So you need to take either profit or loss. So that is reportable. This rule, if you remember, it will help you so much. But 10% threshold should not be a barrier in terms of reporting. We should not withhold details by taking shelter under 10%. Suppose all the segments in a company are having turnover. I presume you know segment, business segment, geographical segment, segment expense, enterprise revenue, segment revenue, all this. Otherwise, go through the basics in your class notes. You will have the detail. Then, if all the revenues are 9.9, 9.8, 9.7, something like that, then the requirement comes, it may escape the segment reporting. Then the very objective of the standard getting defeated. So how to overcome this? Simple. For that, they have a overall rule, 75% of enterprise revenue. What is the big difference between segment revenue and enterprise revenue? Segment revenue will include inter-segment sale. One segment can sell to another segment. For example, paper division can sell to cement division. Segment revenue. But enterprise revenue, only transaction with the external customers. So calculate 75% of enterprise revenue in any segment. Suppose 75% of enterprise revenue not covered through segment reporting. Then additional segments should be identified as reportable even if they do not reach the threshold limit of 10%. So your normal rule for 3 tests, it is only 10%. It is only 10%. So where we bypass that rule, if 75% of enterprise revenue not covered in segment reporting, we are identifying additional segments as reportable. Having this clarity, and if any question comes in terms of identifying reportable segment, presenting this in this order, revenue test, asset test, result test, then the overall rider class, that would be a fantastic answer. If it is 6-mark answer, first what they expect is not merely the numbers. You need to give this explanation, apply that to the case. That should be your way of presentation. In the MCQs, concentrate on the answer. In the other descriptive questions, concentrate on the working. I mean, the process matters, not the final answer. The process matters. How you present P&L, how you present balance sheet. Are we complying Schedule 3, complying with the Schedule 3? These points equally matter. Then accounting standard 22, deferred tax asset and deferred tax liability. This is a bridge between your accrual concept and cash basis, which may be endorsed sometimes under the Income Tax Act. Keep it as simple as that first. Second, it is a bridge. Without this, income tax will pull us towards a cash basis on some grounds. For example, 43B, section 43B payments. They are allowed only when they are paid. That's what we are calling it as cash basis. Today, if for the sake of income tax, you shift to cash basis, tomorrow some other act may mandate us to move away from some other principle, accounting principle. That is why accrual steadfast we hold. And if the depreciation, if it is higher in accounts, if it is lower in tax, or vice versa, if depreciation is lower in accounts, which will be the general case, and higher in tax, how to handle, it will generally lead to DTL. So for that, you will compare the accounting profit with the tax profit and things like that. You should familiarize yourself with the 2-3 key points. If you want, you note. Otherwise, I think the video will be available later. Also using past function, you can note. First criticality here, recognition of DTL, DTA. This you need to understand and present clearly. Second criticality, Recognition of DTA requires test of prudence, which means only when you have certainty about future taxable profits, you can recognize DTA. Such a requirement is not there for DTL. And the third important point in this direction is if there are two differences between accounting profit and taxable profit. One is called timing difference, which originate and reverse. And second one is permanent difference. Permanent difference, if you have a flowchart approach, ignore. No need to bother. Permanent difference. So I'm focusing on the key accounting standards for this exam, September 25 exam. So then next, so I was talking to you on the say deferred tax liabilities, deferred tax asset, the recognition principle, test of prudence. So thereafter, next important point in the deferred tax asset liability rule, when you handle revenue, the rules will change. The profit impact will be different. For example, there are questions where construction contract, we go by accounting standard 7, percentage of completion. Income tax, they use a different method. So what will happen? The profit, accounting profit and taxable income will accordingly change. Now go to the next, one easy example for DTA, set off carry forward, brought forward loss. Will lead, this is like thumb rule, which will help you. I have other mechanism like current year less tax, future year more tax is equal to DTL. That's all. In India, you always pay tax as per taxable income. Every person working will know, or every person who is familiar with the articleship kind of a training will know that we always go by taxable income. Suppose you are not exposed to articles, no problem. Tax class, PGBP computations you make. In that, what profit you get, that is called taxable income. We do plus and minus to the net profit reported, and that is called taxable income. So you pay tax as per that. If you pay less tax in the current year, for example, you are eligible for higher rate of depreciation due to electrical vehicle purchase. Then higher rate is applicable under the Income Tax Act. What will happen? Your tax will go down because you will report low profit for income tax purpose. Accounts, it need not be like that. Accounts, you go by useful life. So what will happen? In future, you will not have WDV. Assume 100% depreciation allowed for tax purpose. What would happen in future is that WDV for tax purpose will easily become zero. Assume within 1 year. Then what will happen for accounts? That WDV, if it is depreciated for 5 years, it will continue. So what will happen next year? You will end up paying more tax. Why? Because you will not have asset WDV to offset. We cannot argue I will purchase another asset. That is a separate event. Again, you need to recognize DTA, DTL. Whatever I am narrating now is DTL. So current year, if I pay less tax, future year more tax, I am postponing. Why we take this for a few minutes is this standard also important from the current exam point of view. Like this, you have the approach. One more important point in this direction, which may be tested in exam, which is pending for some time, that is the timing difference which originate and reverse during tax holiday. There is something called tax holiday. So what is tax holiday? During that period, income tax the entity need not pay. Rest of it, you refer income tax paper, you can understand. So if there is a tax holiday and our timing difference originate and reverse during tax holiday, then DTA, DTL will not be recognized. Timing difference originate in tax holiday, reverse after tax holiday. That should be recognized. This kind of some 3-4 conceptual problems, if you focus, that would be better. Another standard which is very important from this exam point of view, accounting standard 12, which is accounting for government grant. So right from AS1, we can have a checklist for all the standard. If it is AS1 disclosure, and if there is a change in accounting policy, the impact due to the change in your financial statement, how are you going to present that answer? Our focus will be on that. So AS2, I spoke about that. If time permit, again, we will revisit 3 cash flow. Cash flow, those operating activities, investing activities, financing activities, which you must be familiar by now. So you will be presenting that. Apart from that, so don't mix the activities. Apart from that, the tax will come only under operating activity and financing activity, interest received, investing activity, paid financing activity. This sort of clarity needed. So I did not say interest expense, interest received, interest paid. So in cash flow, we report only cash transactions. If at all we do any other plus and minus, it is to bridge, it is to come down from accrual to cash. This thought process is required. 4 is about contingencies and events occurring after the balance sheet date. You need clarity on balance sheet date of approval of accounts, and the events occurring in between that. It may be earthquake loss, bad debt, insolvency confirmed by the court. These are the popular past questions, and various other things where the event happen within this gap. I mean, balance sheet date of approval of accounts. So those events are bifurcated as adjusting, non-adjusting. Adjusting if it provides additional evidence relating to condition existing at the balance sheet date. For example, court adjudicated a customer as insolvent. So what is rest assured for us? Bad debt for the company. So if it provide additional evidence, so already there is delay in payment, the customer not a proper customer, the court order provide additional evidence, it become adjusting event. You have to adjusting means you will adjust your P&L balance sheet, and some of them will be, the information will be given in the notes. 5 is about prior period items and change in accounting policies. You all know that. 7 is about construction contract. 5, you need clarity on prior period item. The version of 5 prior period item, you should not misunderstand 5 like anything relating to last year is a prior period item. It is not like that. So the definition very clear. Any error or omission, a change in the reported values of the current year as a result of an error or omission in one or more prior periods. That means you are rectifying in the current year due to an error or omission in one or more earlier year. So two things together covered. One is there is some error. Second is there is rectification, error or omission. So prior period definition, if you take 2 minutes, 3 minutes of your time and go through today, it will give you fantastic clarity. So students sometimes misunderstand like anything relating to last year is prior period. No. So it should be error, omission in one or more prior period and rectification in plain language. Then only it is prior period item within the meaning of accounting standard 5. It also deals with the extraordinary item which are clearly distinct from ordinary activities and changes in accounting policies. So those things you have to go by 5. And then 7, construction contract, we can categorize that as B. So A, B, C in that B. Why? Because it is recently tested, but you have to focus on percentage of completion. If the contract period exceed 1 year, how do we create provision for foreseeable loss? This concept clarity needed for a better presentation. So after that, 8 withdrawn, no longer there. 9 is revenue recognition. You should focus on the definition itself first, revenue. And then how do we recognize interest, dividend, royalty? These 3 things. How do you recognize? There also percentage of completion applicable. For service income, how do you recognize? So all that here we can say 75% chance for theory, 25% chance for numerical questions. 10 very popular. Of course, even if it is not directly tested, there is a possibility of indirectly asking property, plant and equipment. So you need substantial clarity as to the cost model, revaluation model. Now, those who are participating, I would like to hear this from you. If there is revaluation due to which one of the property, plant and equipment, the value reducing. Am I clear? Revaluation, we are having a WDV, let us say 200 lakhs. Revaluation amount 180 lakhs. So our WDV 200, revaluation 180. This revaluation loss, where will you take? Which account we will take? Any of you? Make it fast, we have less time. So where will you take the revaluation loss? Any of you participating online?
Kindly respond. Dear students, kindly respond. Your YouTube videos also you can text so that I can inform to sir.
If it is otherwise also no problem, sir. We will continue. Actually, this is last minute revision. The idea of not asking question is it should not affect your motivation. It is like the general trend is we used to get accounts like revaluation reserve. See, if it is increase, you will debit PPE, credit revaluation reserve. If it is other way around, decrease, what can happen is general entry, which will come in the class, is reverse. Revaluation reserve account debit to asset account. But actual answer is it should go to profit and loss account. And it should not be debited to, it is not capital reserve. Some answer in the chat has come. It is not capital reserve. Look at the answer I'm giving, razor sharp treatment. So where you cannot have a choice. So where some other account will not be accounted, will not be accepted as correct answer in the main exam. It is first time revaluation increase. Steadfast, take it to mind. It is asset account debit to revaluation reserve account. First time revaluation resulting in decrease. Asset value reduce. It is not revaluation reserve. Because first time if I debit revaluation reserve will have debit balance. In the whole world, it is not possible. One exception, P&L account. P&L can have debit balance. So for that, the entry should be profit and loss account debit to PPE account. So this is tested very often. You need to be careful about that. So first time decrease, second time increase. To the extent earlier you debited P&L, subsequently you have to credit P&L. These are all like eye openers, which we should be cautious. Regarding PPE, the cost component, what cost I have to add. Now I am going to tell one concept which will at least affect 3 standards. One is, I know we have stopped with the AS12. To continue with discussing other standard, we will come back to 12. So this particular AS2, accounting standard 10, accounting standard 26, all the 3 will be affected by this concept. If input tax credit available, right? If input tax, example, GST input tax credit, SENVAT credit, these are all called refundable tax. Refundable means you pay tax, you adjust or get back that tax. That is called refundable tax. Example, GST input tax credit, SENVAT credit, old name, which is central excise value added tax. Third one, customs duty drawback. We import a machinery, we paid customs duty, but that customs duty refunded to us through some mechanism. That is called customs duty drawback. These 3 are called refundable tax. Any refundable tax we should not add to the cost. Why? Because anything which is receivable to us, it will be a current asset, it will be presented separately. It should not be included. Applicable to 3 standards: accounting standard 2, accounting standard 10, accounting standard 26. Non-refundable tax, you pay tax, no input. Those students who are feeling like, I don't know input tax credit, update at the earliest. Nowadays, foundation book has this input tax accounting. So referring 2 minutes, 3 minutes will enlighten you much better. What is input tax, how to account? We need that knowledge for handling 3 standards. So non-refundable, we pay tax, tax doesn't come back to us. That should be added to the cost. So like this, we do one last point, which is extremely crucial for 10, which will come only for accounting standard 10. We need to add provision for decommissioning, which means dismantling. You use the asset. After its useful life, let's say 10 years, we are dismantling the asset. For that, we will incur cost in future. That cost to present value should be added to the cost. This is there in inter also, final also. Standard number will change, concept same. So you have to add the present value, very clear cost components. So this we need to practice some questions. Recent examination, May 25 also, these concepts were tested, like GST, which we are speaking right now, tested in the recent exam. So we can be slightly lenient, but based on student response, it could again come in the main exam. Suppose many are giving wrong answer, means they'll again test the concept in one or other form. So then comes 11, which is accounting for exchange difference. A foreign branch, in the next slide it will come, which topics you have to focus more like that. Foreign branch questions are pending for some time. No prediction.
Slide only. Slide is not coming, sir. The first slide.
No, I'm not showing any slides, sir. I have moved from 22.
Okay, sorry, sir. Okay, sir.
Like that. So that foreign branch question is pending for almost like a few exams now. So question could be asked. So in that, we are in AS 11 now in the order of revision. See, because instead of showing the relevant writings and notes and all that, I feel like this kind of a revision will work better for the last minutes, last few days. So the AS11 integral foreign operation, it is subdivided as integral foreign operation, non-integral foreign operation. In AS11 also, what are there to concentrate? These are like A category standards, wherein more questions can come for the current exam like that. So AS11 integral for 5 points only you need to remember to handle branch accounts question, foreign branch. See how easy it is. Now 2 topics covered, AS only. This is all about AS. But incidental benefit, foreign branch also it will help. First, integral foreign operation, all the opening balances you will convert using opening exchange rate. All the closing balances you will convert using closing rate. When opening is opening exchange rate, closing is going to be closing exchange rate. Purchase, sales, expense, income, academically we convert using average rate. Then, so I have completed 4 now. So first, opening balances, closing balances, purchase, sales, expense, income, average rate. Fourth is fixed asset, property, plant and equipment. Exchange rate on the date of acquisition. This 1 point only unique. This is not new and all, unique. So suppose we bought the asset several years back. I have to take the exchange rate at that time if it is integral foreign operation. So then the 5th important point, the resulting exchange difference, what you get after converting these things, that exchange difference, I have to take it to the profit and loss account if it is integral foreign operation. If it is non-integral, only some 2 changes you have to remember. One, that fixed asset and depreciation. Fixed asset, you will use closing rate to convert. I told for the integral rate on the date of acquisition, not opening. If it was acquired 3 years back, I have to take that rate. Then the resulting exchange difference, what we will do, we will take to foreign currency translation reserve. Now, I have revised it in less than 3 minutes. I would like to write and revise, but due to time, I am trying to give you a capsule which you can enlarge by reference. So this is like your accounting standard 11. Now we will come to the 12, which we are currently discussing. So 12 is about the government grant. In that where they can focus, there are 2 methods of accounting. If it is for specific asset, one method of accounting you can reduce from the value of asset. If you receive grant, you will pass this entry, which would be bank account debit to the concerned grant account. That grant will show credit balance. What I can do, reduce it from the concerned asset, depreciate remaining WD. This is alternative 1. We purchase 100 lakhs worth asset, we get a grant from government 20 lakhs, 100 minus 20, 80 net cost. This is alternate 1. Alternative 2. You can take the asset at full value, 100 lakh, and this particular grant to a separate account, 20 lakhs. So it will be like this is debit, this is credit. Second alternative. Every year you will depreciate full value, 100 lakh. Every year I will bring this 20 lakh grant. Suppose 5-year useful life, 20 by 5, I'll bring this to the credit of P&L. It is called amortization. Your basics are very easy on this. Don't worry at all. Why I'm saying very easy? Just you will take like the debit credit. If it is asset purchase, in the whole world, you will debit asset, credit bank account. So no confusion. You receive grant money, bank will be debited, grant will be credited. If I just net off this account, that is alternative 1. If I keep 2 separate ledgers, alternate 2. So accordingly, your refund treatment will change. After some years, if government orders refund, then what we have to do? So if it is first method, I will debit asset itself. If it is second method, every year you have amortized the grant to the P&L. So to the extent earlier you credited P&L, you will debit P&L now at the time of refund. And what will happen thereafter? The remaining only will be taken to asset, if any. So refund basically when you receive bank to grant, when you refund, it would be grant to bank. That's what normal. Since we are taking grant to another asset account, netting off, then I have to debit asset. So where you are taken originally, that same treatment will help you. There is a flow chart. If time permit, I will share this with Hariharan sir. I mean, time permit means sir should share it with others. If time permit, they'll share. So last few days, we want to keep you as comfortable as possible, not loading you with too many resources, all that. But having these concepts will help you to the core. 20 EPS, earnings per share. So up to 12, we Nook and Garner discussed almost every standard. First, I'll finish few things from 13 onwards. Whatever left out also, I'll summarize a little more. 20 earnings per share in terms of AIS presentation. You need to remember basic EPS is net profit attributable to equity shareholders divided by weighted average number of shares. So if it is diluted EPS, what you will do? There is something called potential shares. You have convertible debenture. So then if these debentures are converted, what will happen to your EPS? That we need to present with the clarity. What will happen to numerator first? You have debenture today, convertible debenture. Once they are converted, you won't pay debenture interest. Converted means they are converted as equity share. Second change will happen in the denominator. Number of equity shares will increase. So you need to give this effect. You have to present clearly how to present diluted EPS. First, the formula, adjusted net profit attributable to equity shareholders. What do I mean by adjusted net profit? What do I mean by adjusted net profit? Net profit after tax, as given to you in the question. Add back interest, debenture interest, which will not come in future, and reduce tax saving foregone. The difference between debenture and equity dividend, if you have debenture and when you are paying interest, what would happen is that interest would be allowed as expense for income tax purpose. So what will happen? You would have enjoyed tax benefit. In future, after conversion, this benefit will not be available to us. So the net effect, when I am speaking profit after tax, interest should also be after tax effect. That way you store this in mind. So you will, in the inner column, you will keep interest and reduce this tax saving foregone. So if time permit, very quickly we will do one question on this. So then the next one, time management during exam. I'll finish this and then go back from 13 onwards. So new syllabus, all of you by now know the structure of things. One MCQ, I guess 15 into 2, like that. Because why I told I guess is not that I don't know number of questions. Some of the questions will consume more time than yet 6 or 7 mark questions. That is why. So don't give too much of importance to the number. This is like a broad guideline. And for a 2 mark question, maximum 3 to 4 minutes, that's okay. It is paragraph type nowadays. So you are investing your time for 4 to 5 questions at a time is the pattern. So don't monitor time too much there. You maintain like 4 questions, how much a mark? So 4 into 2, 8, 8 into 1.65, roughly it will go up to some 14-15 minutes. You can time you can devote. See, because in a rush up model, MCQ you should not mess up is my concern. So no doubt, one question 2 mark, but some of the questions of the current exam, I mean past few examinations, including I can say September 24, May, January, all this. If you check, it is like it is a paragraph pattern where 3 or 4 questions emanate from that paragraph. It may be cash flow. It is buyback many times. Buyback questions are very easy for them to test those 3 things. Equity test, reserve. I mean the resource first one, the number of shares test first. Then you will have the resource test. And the third one, debt equity test. And that debt equity test also, there is a small technique. Without any XY formula, you can finish. See how much big relief I'm giving to you when you handle MCQ. It is like to arrive at the number after finding amount. If you add face value to the buyback price in the denominator, you will get number of shares. To demonstrate that, we will have some other occasion and demonstrate. So this is how the pattern is MCQ 30, and after MCQ results are only better. So concentrate on that. Capacity is about how much you can do. Capability is how best you can do. As you scale up your capabilities, automatically capacity also will increase. I mean, the how best you can do is about presentation. Some students, if you see, they'll have phenomenal subject knowledge. You ask anything, they can narrate the nuances nicely. But when it comes to exam presentation, they simply don't get the mark what they deserve. That is due to presentation problem. So we can demonstrate why the deviation by asking, interacting and all. But so due to the other things to be covered, I skip that. Now moving to this, This is called professional ambiguity in our class language. Some students, after putting balance sheet total, they do like this. They first write a number, cut that, on top of it, put a tick mark. It can happen in accounting standards as well. In a step, they write one answer, then cross that, then put tick. Nowadays, there is a latest trend on this. They put OK on top of it. So it is utter problem for the examiner. Now, examiner will wonder, should I take it as correct or wrong? On top of it, if somebody write OK, now imagine examiner, whether they should take it as correct or wrong. It's a problem. So concentrate on this. If you want to rewrite, rewrite. So specific. Start with well-known question, old theory, but works till date, and followed by reasonable level. End with unknown question is the, commonly accepted norm. Compliance with the schedule 3, very, very important. Don't break the balance sheet into several pages. It will be confusing. Same thing applicable to accounting standard answers also. Then be cautious on denomination, exchange rate, short narration, and carry forward. So these are all common problems. Denominations, rupees in lakhs, crores, thousands, that you have to be careful. Exchange rates, very much you should be careful. When you handle two currencies, no student in the world will do this. They add $10,000 with rupees 1 lakh. How do I know? The main answer copies when they share. I come across this kind of a working from a CS student. $10,000 added with 1 lakh rupees. Normally, no student will do that. Exam stress. That is why you need to check twice when you handle forex. Then next, sharpness in understanding question, need of the hour. So your presence of mind should be to the core in the exam hall. Some of the examples, if lease payment is made at the beginning, discounting will change. If it is at the end of the year, discount rate will change, for example. And then borrowing cost, when it comes to borrowing cost, asset side weightage different, liability side weightage different. How liability side weightage applicable based on date of borrowing. How asset side weightage applicable based on date of expenditure. So we should not mix up this. So we should be cautious. So these are all the caution points. These are the focus areas. I told individually all this. This you can preserve a screenshot also for revision. So this branch accounts, since the agenda is accounting standards, in that what is important also summarized here. So then the AS theory, it is 1, 4, 5, 9, 24. Those things are important. Then amalgamation, the purchasing company books, it could be a question of two companies joining together, or it could be a question of one company taking over the other. But purchasing company books focus more, selling company focus less. Then internal reconstruction, complete question could be tested. And there are some 2-3 concepts in internal reconstruction, like the words unreduced should be added to the title of the balance sheet that you prepare after reconstruction. Otherwise, there is a scope to reduce mark. For all the journal entries you pass in internal reconstruction, narration should be given. Then the share surrender kind of small concepts could be included in the question. Then consolidation and buyback, undoubtedly important. AS 23 and 27 could be either mixed with consolidation. In one of the past exams it happened, or it could be tested separately. You need to be very familiar with the 3 methods. One is 100% consolidation, which we call it as line by line addition, where you will add entire asset, entire liability. Second method, equity method. I have to make you quickly understand equity. A short time. Imagine old measuring scale, which used to be there with the goddess of justice in court of law and all. So where old measuring scale, imagine, visualize this, because nowadays electronic scale. So everything will be only in 2 places as per equity method, which is applicable to associate. One is consolidated reserve, P&L or reserve. Another one, new account, carrying amount of investment in associate. Most important sentence for the day. No line by line addition for associate. No question of adding asset, liability, everything line by line, which you do for subsidiary consolidation. This clarity will enable you to score 4 marks sometimes. The format of investment account is very much available in study material itself. You can go through. I am talking about format of carrying amount of investment in associate as per accounting standard 23. You have the broad idea of which accounting standard. Small investment, accounting standard 13. Small investment, less than 20% shareholding. 20% or more, accounting standard 23. That is called significant influence. Then power to control, more than half of the voting power, accounting standard 21, consolidation of subsidiary. And if there's a contractual arrangement wherein two or more entities jointly control, then it is accounting standard 27. Investment in joint venture. Within that, you have three presentations: jointly controlled asset, jointly controlled operation, jointly controlled entity. So this macro sketch should be there in your mind. Once you read one standard for a day, or let's say 4 or 5 standards, while before going to sleep, just try to recollect randomly. This is called mind mapping. It will help you to present better. So thereafter, some of the very popular points which may be tested in the near future, if not, for September. One point is forward contract. There is a forward contract accounting given in accounting standard number 11. Forward contract means in future, if we have to pay some $2 lakh to a foreign seller, we are importing machinery, then that is called non-speculative purpose. We enter into forward contract. Now that forward contract, each one is a separate point here. These are not connected. Forward separate, para 46A separate, IFO, NFO separate. IFO, NFO I briefed already while discussing the prior stage. So forward contract is to protect ourselves from the risk of exchange fluctuation. If assume today exchange rate 80, on the date of settlement, if it goes to 100, imagine if it is $1 lakh, I have to pay $1 lakh into 20 rupees extra. That means 20 lakh the company should pay extra. For this, how you can avoid? You can take forward contract, enter into forward contract with the bank. Any rate, whatever may be the rate on the date of settlement, bank will give you $1 at 80 rupees, today's rate. For this, you will pay small premium. Let's say 30 paise you pay extra, like insurance premium. That 30 paise into your forward contract size, $1 lakh, 30,000 will come. 30 paise only, I said 30 paise, 0.3 rupees. So this 30,000 should be booked as expense. See how easy this accounting is. You have to book this as expense over the period of forward contract. Suppose we enter into forward contract in the month of February, then 2 months related premium will be booked in the current year. 1 month related premium will be booked in the next year. This question has come not less than 4 or 5 times in the past, not less than. It is more than that actually. Then refund we discussed as per the 2 methods. I little rushed up due to time. You will adjust that. Adjusted selling price method. I'll show you one question. If you came across this, just revise and you can leave it as is. Otherwise, working out this would be better. So I'll share one more document also, which will summarize all the standards one point. But this is not, don't think like only this is important. No. Disclaimer, I tell again, this is like a sample. This is how you have to identify and take a list. 1 page, 1 standard is ideal. And even in the last minute, it is possible. Rush through them, that's fine. So you cannot have a macro idea alone and then go to exam. We should have specifics to demonstrate that only, this simplified file. So here if you see, there is an entity which has the following details. See, anybody online can read. Anybody online who can read? Vahida? Can you read this question 1 on screen? Very quickly, we will wrap it up within few minutes.
Yes, sir, but screen is not visible, sir. It's showing
Visible?
presentation as per AS.
1 minute, I'll just share this. Can you check now? Is it visible now?
Yeah, sir, now it's visible. Question number 1. An entity has the following details regarding cost and retail price of the goods purchased and unsold at the beginning of the year. Opening inventory cost 6,250 and retail price is 8,000. Purchases 19,500, 34,000. Inventory on hand minus 23,000. Sales for the period 19,000. Applying the retail method, compute the following percentage of cost price over retail price, cost of closing inventory, value of cost of sales at cost, and opening plus purchasing minus closing stock is equal to cost of goods sold. Profit earned during the year on sale of inventory. Ignore the impact of markup or markdown on the selling price.
So this sort of a question is on adjusted selling price. FIFO, you have lot of questions for reference. Weighted average, you have lot of questions. So this sort of a new question would also shape our preparation. So here first they are asking cost price over retail price, percentage of cost price on retail price. So we have opening stock also and purchases also. So taking one will not help. We are not doing FIFO now. This is adjusted selling price. So what is ideal? Numerator should be total cost. Add this to how much you get 6250 plus 19500. I think you will get 25,750.
25,750.
So that would be your numerator cost 25,750. Denominator, the selling price 34 plus 8, 42,000. Into 100 will approximately give, I guess, 61.3%. Confirm this. 61.30.
61.30.
That is the percentage we get. Cost of closing inventory is the second question. See, what are the two methods of computing your inventory? Continuing this cost details, if it is separately available, I can take that, but we don't have any such detail. Retail inventory, the model, this adjusted selling price is applicable for retail segment. The model itself is like this. You will have selling price, from there eliminate profit, you will get cost. Another way of doing it, if I know how much is cost percentage, directly I can get cost. So selling price of inventory given to you, inventory on hand 23,000. Straight if I multiply 23,000 into 61.30 cost percentage, you will be getting the inventory at cost. Then cost of goods sold is child's play for all of you. Opening stock is 6250 plus I am substituting as per this formula. To save time, it is printed already. 6250 plus purchases 19,500 minus closing stock. How much you get? 23,000 into 61.3 percentage. If you multiply, how much you get? Because I am having retail price here, not cost. You should notice that cost not available. I am having only retail price. So what is very, very important? 14,000.
14,099.
99. That if you reduce, you will be getting cost of sale. And profit is very, very easy. You have sales. Sales is 19,000. From there, reduce this cost of sales. Cost of goods sold principle we use here. If I reduce this 140999, how much you get as cost of goods sold? Is it somewhere near 11,000? Check that.
11,651.
650. 11,651. If I reduce, I get profit. Leave alone the numerical. You will be able to do for sure the numericals better. What I want to demonstrate is some new kind of a question you will find in exam. Suppose you have not seen a question of this. This is from AS2. First, believe that. Suppose you have not seen this type of a question in the past. Then apply your mind cost percentage. Can I take only 6250 divided by 8,000? It won't be representing the whole lot which we sold. How do I get the clue? 19,000 sold. One part of 8,000 also sold. Another part 34,000. From that lot also we sold something. I'm talking about these two retail prices, opening stock and purchases. Both are there. In what proportion? So you cannot attribute FIFO suddenly on our own unless question indicate that. So that is why we take the average and proceed with that. Average in the sense I add the cost of opening stock as well as cost of purchase. Similarly, for retail price, we add the retail price of opening stock. This is called sale value of cost. So that sale value we use as the basis to establish inventory. Very much applicable. This is not an imaginary question. Very much applicable for retail industry. So where within a short time they have to take stock. So for that they use this method. So there are other things as well, like diluted EPS. I was telling you the theoretical computation. Just in few seconds, we will finish one sample question regarding diluted EPS. For the sake of conceptual presentation, we are doing this. So the formula, as I was telling you, is DPS is equal to adjusted net profit divided by adjusted weighted average number of equity shares. This is the formula. So here what we have to do, I am having net profit for the current year, which is 2 crores. This will increase because if these convertible debentures are converted as equity share, so basic EPS, current year EPS, as it is you are giving earning per share. Diluted EPS, if any of this is converted in future, what will happen? We are demonstrating that. So if you convert any of this, I mean convertible debenture, convertible preference share. So debenture interest we will not pay in future upon conversion. So to that extent, profit will increase. So how much would be the increase? 5,50,000. And the tax saving we will forego. Why? Because in future interest won't come. When interest does not come, obviously the profit will be more. That's why I added the interest. Second thing, when the profit is more, you have to pay more tax. As simple as that. So minus tax saving foregone, which is given readily 1,65,000. So if I reduce, I think we may get 3 lakh. Confirm this 3 lakh. How much we get? Is it 365? Use calculator. 5,50,000 minus 165. You will be getting 3,85,000.
5,000.
Okay. So 3,80,000. This is 385. Am I right? 2 crore 3,85,000. Now this will be your numerator. Denominator will be number of shares as of now 40 lakhs. After conversion, one share, one debenture 50,000. 50,000 is the number. One debenture convertible into 8 equity share. So 50,000 into 8. That's all diluted EPS. So I already finished numerator related change. In seconds we will finish denominator related change also. Denominator number of shares 40 lakhs. Number of shares due to conversion. Shares due to conversion. 50,000 debentures are there. I think each debenture convertible into 8 equity share. You can check here. 50,000 into 8. Each debenture is convertible into 8 equity share. Number of convertible debentures are there. So 50,000 into 8, you will be getting 4 lakhs. So denominator 44 lakh. This is called adjusted weighted average number of equity share. In short, adjusted number of shares. So numerator 2 crore 3,85,000. Denominator 44 lakh. So if you divide
4.63 DPS.
I think less than basic EPS. Check the question. You are having basic EPS of 5. So it is less than basic EPS. Then only it is called dilutive. Dilution means decrease. This is one clue. Is it right, Vagita? 4.63 we got. So
Yes. 4.63.
The question will become tricky. That sort of a questions also we have. Suppose if your interest is not 1 year interest, there is a clue, debenture is not outstanding throughout the year. Suppose it is 6 months interest, instead of 550, if you are having in question only 275, you need to become alert automatically. Question may not indicate that debentures are not outstanding throughout the year. That is implied automatically. Denominator, I should make one small change. Now 50,000 into 8. This answer over. I am telling if the interest is less in the question. 1 year interest you should calculate. Test the question. Be clear about this. This type of questions pending. It has come in the past also. So pending means for the recent exams it is pending. I repeat again the point. If your actual interest is less than 1 year interest, there is a clue. Debentures are not outstanding throughout the year. When debentures are not outstanding throughout the year, numerator effect I am giving only for 6 months. For example, if it is in 550, instead of 550, 2,75,000. That means debentures are outstanding only for 6 months. Denominator also I should give effect only for 6 months. So with this, we can go on and on regarding AS presentation. I highlighted few of the nuances, even though 13 plus we have covered randomly here and there. Never omit standards like 28, which talks about impairment, standards like 29. You can categorize them in the next, and then standards like 25. An out of the box kind of an idea will help you. I mean, in the exam hall, will help you to face unknown questions also. Standards like accounting standard 24, which is actually discontinuing operation, discontinued operation. So there, if you check, it is like only some 2-3 theory questions are there. What are the items together contribute for discontinuing operation? Kind of a question. One question. Second, this IDE, initial disclosure event. What are all disclosed for a discontinuing operation? Very, very theoretical. You can self-prepare. Only you have to imagine if a company is going to discontinue their operation, what would be important to disclose? For example, how much would be the employees who will be sent out? This is a useful detail we need to give. Like that, a list of disclosure is there. Go through them, self-explanatory. So because a theory question there might be one exceptional possibility. I repeat again, if you read foreign branch, you will be, you will get advantage in AS11 also, in foreign branch also. One last point, para 46A, very popular, very important in the course, accounting standard 11. What is this para 46A? If a long-term loan, foreign currency loan is taken, the related exchange difference should be generally taken to profit and loss account. We take a long-term loan, and using that long-term loan, you are purchasing an asset. This long-term loan is a foreign currency loan. The exchange difference, if a company choose para 46A, if they adopt 46 read with 46A, if the company adopt para 46A, which they should disclose, there is a possibility of taking that exchange difference to the asset. Exchange loss, you imagine debit balance. Normally, where you will take P&L account. Here, what they are saying, you can take it to asset. Okay, we will take it to asset. Now, anyway, what is the effect we are creating through this? You remember the nutshell. It will be clear forever. What is that nutshell effect? We are bringing it to the asset so that it will again get recycled to P&L in the form of depreciation. Now, why this treatment? This exchange difference arises due to something called restatement. Restatement of loan means I take loan on one day. Year end, at that time exchange difference, exchange rate may be different. Year end, exchange rate would be different. So we restate. First we state record. Second restate. So entry, normally you want entry, bank account debit to foreign loan while taking loan. And based on exchange rate at that time, year end, exchange loss, assume exchange rate increase. So exchange loss account debit to foreign currency loan. Normally, where you will take P&L to exchange loss. If a company choose para 46A, it will go to the asset, and through in the form of depreciation, it will come back to the P&L over the period. This is very popular para 46A. If the loan is taken for non-depreciable asset, we open a very new account, which will be lengthy but easy. Foreign currency monetary item translation difference account. That is what is that acronym I wrote in the PPT. FCMITD account. So you need clarity on this, and the para should be presented. This is the most popular question in the course because it comes in final also touching this concept. Inter more 46A is our syllabus. Para 46. Generally, we don't speak about para number, but this para very popular in the whole course. So presenting that para, applying that to your case would be ideal presentation. So these are some of the nuances of presentation. Every standard, wherever you attended class or self-prepared, whatever may be the mode of preparation, have a checklist like this. And last minute, as you glance through them, the recollection will happen in your subconscious mind. With this, all the very best for all of you. And definitely we will meet in higher platform like CA final or as a member and all that in future. Thank you all of you. Thank you, Hariharan sir, also for this opportunity. Once again,
Thank you for your valuable time, sir. Thank you so much.
Thank you,
Now,
sir,
any-
for valuable time.
Thank you, sir.
Any other doubt, Kanna? Egambaram? What's it?
Any other doubt, anybody, we can address that
No, sir.
specifically. Great, great. Nice. Continue with your momentum. Prepare well. All the best once again. Thank you.
Thank you all.
Just 1 second, sir. Somebody posted question.
Please.
Okay, no question.
Thank you only.
Thank you. Thank you. Thank you. Thank you. Thanks a lot. Thank you.